Hong Hao is the chief economist at the Grow Investment Group. I asked him for his response to the special action plan to boost consumer spending.
In today's press conference, there's a lot more details that is coming up, how to use the policies to support consumption going forward. Specifically, we're seeing, mentioning about increasing people's base salary, increase unemployment benefit, and also increase social safety net for people who are getting older and retiring from the workforce. And these are very sort of a comprehensive work plan. So it's actually showing, where the Chinese economy is heading and where the policy is going to guide the development of economy going forward. So, I think right now, we have a top-down mandate. As you know, in China, everything is top-down, right? So once the central government has made up its mind, then the policy directive will be sent to the local regional government for them to execute. So having said that, because we've been talking about this for years, and now we're, making an initial baby step forward. A lot needs to be done, especially on the provincial, on the city level.
Is boosting domestic consumption in China really enough?
Especially for this year, if you only rely on consumption to drive growth, it could be a big ask. All right, so because we just started, and also consumption is still relatively smaller part of the economy. I think right now consumption takes up, less than 50%. It's about 46% of GDP. It's substantially less than countries at the similar development level as China. Right, so a lot needs to be done, and also, in terms of the trade war, because much of the industrial capacity are now, oversupplied, and therefore, the price pressure on the domestic economy is going to be huge. So I think it's a monumental task.
And finally, we have had data out today showing growth in retail sales and industrial production. What is your outlook for China's economic growth in the months to come?
Yeah, I think today's IP industrial production is actually a bit stronger than expected. Reason being because of the trade war. Many businesses are trying to front run the tariff, trying to stock up on cheaper goods, before the trade war begin. So I think as a result, if you see the exports numbers and also the IP numbers are very, very strong. Also, consumption number is higher than expected as well. But having said that, because of the this one-off impact from trade war, I think going into the second quarter of the year, we'll start to see some signs of slowdown, especially in the export sector and the manufacturing sector. And I bet that it's already happening. For example, if you look at the leading indicator of export order, is starting to decelerate. So I think, it would make it much more difficult to grow towards 5% this year. I think, besides better consumption, besides, some investments towards high-end manufacturing and high-tech sectors, much still needs to be done, to get to the growth target of 5% this year.